Right. Looks like even over the course of this talk, we've pumped a little bit more. 15%. That setup that I put in the degen play there, we're almost at my realistic target here. If you did take that play, feel free to go ahead and lock that in. Some of these other ones just pushing a bit. Let's take a look at Bitcoin. Man, 114.6. We are pushing. So this is the bearish order block that we were looking to tap into. Any type of higher low off of this is going to look quite good. We're back above the golden parabola, guys. And if we close the week here, again, it's just going to look like a solid recovery into that golden parabola area. This red line here is the pi cycle bottom line. That's going to be, you know, the number to beat. We're kind of resisting it right now, but any closure above this 115, you know, we have a fair value gap here at a 117, 118. So there could be some shenanigans in this area, but it's still going to put in a higher high than this little local area. If we go down to the day, this little local area right here. So if we do get into that, you know, 118 to 116 area, it's going to be a higher high off of this shoulder than any low, right? Like literally any low is going to be our higher low. So this is looking quite interesting for potential recovery. And then on the weekly, you know, while we do have a lot of this bearish divergence that pushed us down to the 50%, oftentimes we get pops off of that 50%. And we do have some hidden bullish divergence looking to confirm. If we can keep this going, we are at maximum low volatility on the weekly. And these have often been moves that have just sent us. Let's take a look at this vertical right here. Let's take a look at this vertical right here. Let's take a look at this vertical. Just project one. Okay, sure. Right. As long as we had a bullish bias above that pi cycle bottom line at maximum low volatility, look at this move that we got sent on. Okay. Here we had that bullish bias above the pi cycle bottom line after we had reached critical maximum low here. You know, we didn't really start pushing till back here, right? So you can see that our volatility just kind of meandered a little bit. We can actually go to the point of breaking up here. Broke up there, broke here, here. We're going to wait for it to like come to the, it has to kind of expand a little bit because we don't know which direction it's going to expand exactly. The upside could be a fake out. It's still turned down very heavily and pushed to the downside. Volatility is direction neutral. But as long as we maintain that bullish bias into the break to the upside on volatility, we can get a massive, massive push. Look at this massive, massive push. Massive, massive push. Massive, massive. I mean, I would expect this to carry us up to that 130s zone. Quite frankly, I would at least get back to our all-time highs. This setup is an incredible setup, which is why we have to be so cautious at the bottom, because it can also break to the downside. Volatility is direction neutral. And so if I've been chilling out just for, you know, like a week or two, you know, trying to watch every day just to see what our little bias is, it's just because we're winding up for one of these classic sky moves. Okay. That's what I got you in here on. That's what I got you in on here on. And then if you were back with the alpha commission with me, you got in on it back here. Okay. We were already riding this in alpha commission, so we didn't worry about that one. Again, the golden parabola has always been a great opportunity. And as long as we continue to go parabolic, and as long as we can maintain some type of bullish edge on top of that parabola, we're still going parabolic. And although they put the first crack in the parabola, meaning the second time that we break through the parabola, it could like shatter it to the downside. Oftentimes you just have like a breach and then a go, and then the second one is the one that really cracks down. You can see it kind of back here, right? Like this was kind of like a breach to the downside. You broke it here, and then you just like really broke down, right? We broke down once, and then when we broke down the second time, it was bear market time, right? So, you know, once you start putting cracks in something, the next the next hammer down can be quite bad. But the first hammer down is often something that can be recovered from. And so if this was just the first hammer, okay, it doesn't mean that we can't go on a wild ride to the upside. And I've been saying that the whole time. It's just we have to recover these levels first. And my basic bias is the pi cycle bottom line for you guys. Okay. So, my golden parabola is a nice theory of the market, but it's not price action itself. It's not historical data. The pi cycle bottom line is historical data. So now we've got like a theory of the market. And if we can flip above 115, then we've got historical data. Because the pi cycle bottom line calculates a huge amount of time. Okay. And so that's going to give us just an average, a structural basis. And then if we can engulf this candle, right, this was a bearish candle to the downside. But if we can engulf it bullishly, right, which would be anything closing basically above 115, we'll have negated that. And then we'll close candles back at these levels that we can get a push, right? At these levels that we can get a push all the way up to 120s. And so this is going to be a good opportunity for us to continue to the upside. And that's why I've started to give you, right? That's why I've started to give you some setups in the degen section and in the scalping talk section. ETH is looking good here. That almost looks like a higher low to me. ETH looks like it wants to close its week bullishly engulfed. Look at this. Right? We have another hour to go, but this candle is going to close bigger than this candle. And for altcoins, that's a very good sign that ETH is bullishly engulfing that candle. We're back at these levels that can take us back to our highs. If we go to the daily basis, lots of bullish divergence here. Even my MACD is starting to get some signals to the upside. It's a very nice close here. Now, we have the same problem on ETH that we have on Bitcoin, which is that we have this high here. And so we do have to take out, let's just call it 4250. Okay, we have to take out 4250. If we take out 4250, then we'll take out this neckline. And of course, you could be a front runner down here with me. That's why I put some calls in the degen chat, right? I wanted to get some front. We have a 15% move on eigenlayer, right? Not bad. But that doesn't mean that anything's been validated. It's just a thought process, right? It's just a front running. But you can see that we'll have an Adam and Eve structure here. And that'll get validated. Right? You can call it a cup and handle if you want. But it's an Adam and Eve structure. That'll be validated if we get 4250. And what's the measured move on that? Right? Well, we'll probably have some type of a pullback. Okay, we'll probably have some type of pullback. As long as we hold this low, but basically under here, right? As long as we hold 3700, any type of pullback there is just still an accumulation. They could extend it, right? It would still be an accumulation wedge. Still, the same measured move is valid. That measured move is back to 4700. And now we're putting a lot of pressure on the top of our system here. And we've already got one crack in that system. Right? And so if we're accumulating to the upside, this is just like a fake out before the breakout. Right? There's the possibility that this is like a great entry, actually. So I want you guys to be just open-minded to the possibilities that are coming up here, as long as we hold this area. Because we're finally at areas that are controllable. And we're finally building structure. Now, the only thing that I would suggest is that historically speaking, in this cycle, it's not been that simple. Now, ETH, of course, just went this one push. Otherwise, it's just been kind of like sticking around. But if you look at Bitcoin, it often has these false starts. Here's the high that you need to overcome. And then, it pushes up, but it's a false start, right? Breaks down. Here's the high you have to overcome. It pushes up, right? It doesn't quite hit it, pushes back down, pushes up, doesn't quite hit it, pushes back down, pushes up, doesn't quite take it out. So again, you know, we can be right here, but if we don't close candles above that 50, you know, 115, let's give it a specific 115,300, right? 15. 115,315. If we don't get candle closes, okay, on the day above there, then on the weekly, 115, right? So, you know, we don't have to do it today. Like, it doesn't have to be the weekly close that closes above 115. It could be a daily close and then some candles, right, to validate it, you know, next week, okay? Because we got a lot of events coming up next week that we talked about. But as long as we're underneath these levels, we can't count on it holding. We have to be aware that we can still get a rejection in this area underneath those levels, and that this could be the next fake out to the downside. And it could make a higher low, but it could be just the next fake out to the downside. Okay, and it could make a lower low also with a bullish divergence and still be bullish. So, you know, the counter argument is, or the cautious, you know, the caution is that if we don't take out this level, then we still have to be aware that 100K is still on the table. It's still on the table. And that would just, you know, to be honest, it wouldn't be anything particularly special here. Right? Boom, 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 boom. Bullish divergence, and then you try again. Okay. So just understand that we still have this order block down here in this 100K area. We still have the 50 weekly EMA. Here's my EMAs. Right here. We still have our weekly EMAs there in case this fails, it gets rejected. Right? And what could, you know, what could send us today is just like rumors. The Trump administration is putting out like, we think we're very close to a deal, guys. And then next week, you know, we rejected the deal. Right? Like a 200% tariffs on China. Right? Like that's what next week could bring, right? We don't know. Okay. But the taco trade has typically been bad news before the weekend, and then they clean it up right on Sunday. And then the next week kind of like chugs along a little bit. Right? So this was another taco trade. Last week he said 150% tariffs on China. And then suddenly on Sunday, before markets are going to open, right? Just kidding, guys. We were just rug pulling you again, right? It's how he's been controlling the market. This cross right here is a bearish cross, okay, that we see to the downside. He's still building a lot of structure. We got a big capitulation down here, and we bounced all the way back up to there, but we didn't overcome the pi cycle bottom line. And then we filled up this area after we came back down, and we filled up this area. You know, we broke down, we bounced back up. We could still fill in this area a bit, right? Nobody said it's over yet, but we are getting very, very close. And ETH is looking like a very good line. Let's take a look at what Solana is doing, actually. Yeah, Solana is also bullishly engulfing its last week's candle. That's awesome. Okay. It has some problems. It's still underneath this order block. So it's still underneath this bearish order block here, breaker or whatever you want to call it. And it has to flip that. It has to flip that. But it looks like it's attempting to get into a squeeze. Whereas it had a negative squeeze, it's attempting to get into a squeeze to the upside. And, you know, it could be something like this. You see this little cross right here? Looks like this little cross. And then you can see how it pushes up. And then it like came back to its highs. And then it broke down. So, you know, I don't know how this is going to go, but we've seen this before. And if they can succeed in holding price here, just holding this little low under above 187, there's a good chance that we can come back to our highs. Okay. Yeah, we had some resistance back here also, this little area right back here. And it took a couple tries, right? It took a couple weeks. This is a weekly time frame. It took a couple weeks for them to grind through that. So we could still be like a week or two into this, but things could suddenly start rising very, very quickly at any time, guys. Likewise to the downside, if we lose those lows. This is looking much better than last week. This is what you want to start seeing. And here on the weekly, it's very difficult to discern what's going on. And so it's really the daily that's starting to build this stuff. And the daily, you can see, oh, there's some phantom drives. It's not classic. It's a phantom drive. Most people will never see this. It's a phantom drive of bullish divergence. Pushing to the upside. We're about to break the 50% on the daily. We would expect to push up on price and then a pull back on price. And as long as it can hold that 50%, hold this EMA over the next several set of days, because again, the weekly just is not caught up yet, then the day could be what leads us up, which means that you're trading on the 4-hour or the daily at most. Okay, you're getting hourly setups, you're getting 4-hour setups, you know, maybe a daily setup on some of these things. And then beyond that, it's not guaranteed. It's not guaranteed. So that's why it's kind of like a front running setup on the macro. It's not a guaranteed on the macro. Once the weekly starts coming along with us, which this actually looks like a nice breakout back test right here. But if this confirms, which it's not really going to be able to do unless it takes out this high, basically getting back into the bull zone. But if the weekly gets into the bull zone, okay, because the day starts building that bull structure, and then the weekly gets back into the bull zone above the 60% on the RSI, ETH could really start rocketing. I mean, look at what it did back here, right? Like, this is kind of the analogy. This little high right here. This is basically this little high. I'll just put a vertical line like literally right here. Okay, where it overtook that high. And then we'll take a look on the chart where that moment was. And you'll get an understanding for why I'm kind of setting that standard, right? Look at where that was. Okay. And so that's what I'm saying. Like, I don't really care about this little chop. It's a good sign. I don't really care about it. I want to see those weeklies like catching up to its previous high and taking out its previous high, because then you can go on a wild ride. And that puts this kind of like, 300 to 400 area potentially in sight for Solana. And the corollary is the breakdown can be just as punishing. Okay, breakdown can be just as punishing. So what we don't want to do, because remember, we're retracing right now, right? We have high, lower high, lower high, lower high, low, lower low, lower low, yet again another lower low. What we don't want to do is take out this 50 to the downside. This is a downtrend. The reason why we have to take out this high is because we need it to establish as a higher low. By taking out this high, we'll have established this as a higher low, and then that's going to suggest that macro push to the upside. If we don't take out this high, we're literally just in a macro downtrend right now. And the next breakdown, I think we can calculate it. Where's the bear zone? Like if we do lose this right here, and we're very close to this area, if we do lose it, our bearish control zone is 124. Okay. We're $200 right now. We're talking about a quick push down to 124, right? So you don't necessarily want to be in on that ride. You want to buy down there, but you don't want to be in on that ride if you have Solana. So what do you do? Well, I showed you the setup, right? Just taking out this low. What is this low associated with? Well, right there. There's that candle right there. So where's your stop on Solana? It's basically under 167. It's a big drop, but that's 167 so that you can prevent going to 120, right? And then you give yourself some breathing room for whatever this thing needs to do, because we're operating on the weekly, so there might be some big moves, right? You could put it much tighter right? You could put it under 190. Okay. Or you could put it underneath these candles right here at 186. You have a much tighter stop loss. But just remember back here, it took like a couple candles like shaking up and down. Look at this wick. It pushed down very hard, right? This wick right here before it like rocketed to outer space. So if you don't leave yourself enough breathing room on a macro move, okay? I already told you what it was for like the day trading stuff. Like, you know, you're just trading on the hourly or the 4 hour, the daily, okay? Like, just follow your EMAs, okay? But if you want to take advantage of this macro move to the upside, you're going to need to leave yourself a little bit of breathing room, unfortunately, okay? Because we see how this stuff gets shaken out, and we have kind of the similar candle setup. You see these equal lows. There's liquidity under both of them. These are also equal low wicks here. All right, look, low, higher low, higher low. There's a stop loss here, there's a stop loss here, there's a stop loss here. And so the risk is that they push up, and then they flash wick down, and then they get